Hi, everybody. My name is Robin Speziale, and I'm the national best-selling author of a book called Market Masters. So today I'm going to be talking about how to build wealth and how to build your net worth in your 20s. Okay, so from the age of 20 to 30 years old. What I've done in my life is I started working very early. Okay, so I grew up here in Canada in a city called Mississauga, and my first job was a paper boy. And Warren Buffett was a paper boy as well, and he would use the money that he earned delivering papers to do other things. So from there, what I started doing is I started going to flea markets and to Goodwill, to Value Village, and I actually learned from my uncle from a very young age. I think it was about 12, 13, 14. I started buying these little antiques, old toys, and started selling them on eBay. And back then, in the year 99, 2000, 2001, the Canadian dollar is very low compared to the US dollar. So I would sell these antiques that I bought here in Canada. I would sell them to Americans in the US, and they would pay me in US money. I'd convert it to a Canadian, and that currency exchange would be a big bump. So I found a niche there. I also worked a lot of part-time jobs throughout high school, and I recommend you do the same. I worked at a grocery store. I was a painter as well as a salesperson for painting services. I worked at Best Buy selling cameras. The joke I say is, who buys cameras anymore? And what was important for me was earning money so that I had a nice cash account. I had a nice base, so that the next stage really is then having money work for you. So after that, you want to start investing in assets. Okay, so there's a really great book out there. It's written by Richard Kiyosaki, and he has this quadrant model where he says, focus on the assets and minimize your liabilities, because let's look at the net worth calculation. It's your assets minus liabilities equals your net worth. So you want to have, in that numerator, you want to have more assets than you have in your denominator, which is liabilities. So here's some assets you can start investing in. There's bonds. You can invest in a government bond or a corporate bond. Government bonds are more safe. The other asset class is equities or stocks. This is the asset class that I prefer, and which is shown to have the best returns and price appreciation over time. And then the last major asset class is real estate. So what I did, if you look at those three asset classes, bonds, stocks, and real estate, I started with bonds, which I bought in high school, and I earned some interest then. And then once I turned 18 and I started university, I cashed out those bonds, and then I started buying stocks. And start reading as many books as you can on the stock market and how to invest. I recommend researching Peter Lynch. Go on YouTube and watch more about Warren Buffett, and even read my book. I have a free book, Capital Compounders. If you email me, I'll send it to you. And research how to invest in stocks, open up a brokerage account, and just start investing. Do your own due diligence in companies. I tell people to start with a nice foundation of either Dow Jones stocks. You can pick 30 of the biggest companies in the world there. Or if you're in Canada, start with the TSX 60. The TSX 60 has some of Canada's 60 biggest companies. And the last asset class there, which I started buying into after I graduated, was real estate. And real estate has a very good track record over time as well. There has been dips in prices of real estate, but over time, the returns are quite nice and stable. So I bought a condo, and I see my condo as a smart asset as well. I'm paying down the mortgage on, but the main focus for me still to this day is just buying partial ownership in companies and accumulating more stock in my portfolio. And what I tell people, and some people were surprised, is that, like here in Canada, for example, there's lots of Dollaramas. These are the big dollar stores in Canada. And when I tell someone, hey, you can actually own a part of Dollarama, and they look at me like, really? I say, yeah, if you go onto the stock market, you can buy shares in Dollarama, and you can be a part owner, and you can benefit from the growth of stores, and you can benefit from all the profit that they make. So that's the really exciting way for me, and how I build wealth. So I've gone from $0 obviously when I was a kid. And then I went to about $10,000 right before graduating high school. And then I worked some co-op jobs throughout university, kept on building my portfolio, and invested in that condo. And I'll be investing in more property as well. But now my net worth stands at right around $500,000. And I achieved that net worth of $500,000 before I turned 30. And the beauty of building wealth after a certain point is that picture a snowball. It's like if you start with a small snowball, you form it in your hand, and you start rolling that snowball in the snow. It gets bigger and bigger and bigger, and it actually takes less effort for you for that snowball to be bigger, because then you can just roll it down the hill, and it just accumulates more snow by itself. And that's how you should view building wealth. And that's how you should view starting with small amount of money, and then making that money work for you. And then soon you can almost take a passive approach, right? If you build a stock portfolio of $1 million, you've done that through being very active and very aggressive because you're young. Once you have $1 million portfolio, what I plan to do is shift most of that money into dividend paying stocks. So if you're being paid 5% dividend yield on $1 million, you're getting paid $50,000 per year in dividends, and you could live off that if you wanted to, and you can achieve very early financial independence through just being paid dividends. And it was actually John D. Rockefeller who said that that's his most favorite thing in life. He was a famous American capitalist, is watching the dividends roll in. So I hope this helps. Most importantly, you want to be thinking about always investing in assets. Okay, have lots of assets in your life, and don't focus on the liabilities. A car is a liability. The things that you buy, like, these are all expenditures and things that you don't want to accumulate in your life. And I think lastly, because I've been able to be frugal, because I don't buy a new phone every 6 months, every year. I don't buy a lot of things, shiny things. I'm able to save that money and then to invest that money, so my money works for me. If you have any more questions, you can email me at r.speziale@gmail.com, or you can check me out on robinspeziale.com. You can find my email there, and you can find some more articles on how to build wealth and how to invest in stocks. All right, guys, have a great day.